Hello, everybody. Happy weekend. Thank you all for being here. Today is the time of the week where we take all the top questions from the week and we answer them in great detail. And this big learning from this story today, as well as a lot of information packed in and a couple of cool surprises at the end too. So let's obviously jump in. And of course, anything I say here is always edutainment, never financial advice. We are sponsored by today, white tea. That's it. So completely objective. Anyway, these are the questions that come from the Patreon community. Big thank you to everybody in Patreon. You guys make this possible. And I love the way you think. And every week, the questions get better and smarter and tougher. So let's jump into the first question. It's from Xerox 8610. I'm sure there's a lot of people out there in the audience don't even know what a Xerox machine is, because that used to be what we call a photocopier. Anyway, based on the recent movements in Bitcoin and ongoing volatility with banks, are you still expecting Tesla to outperform Bitcoin this year? So, most important thing is time series. When I do things at a certain point in time, then they are valid. But things change very, very fast in this space. In fact, hold on a second. I think I got the wrong template on. Okay, good. So let's first of all talk about when I did mention that. And that was at the time when Tesla was beaten down, trading literally at 102, 106, 109, and it was shocking. So this is when Bitcoin, I think, was trading about $20,000. So I always say keep your tap dancing shoes on, but a quick reminder of what this kind of pair looks like. And we're going to be talking a lot about pairs today because, as I say, everything is a pair. So we're going to talk about flipping too, because some people still get confused between pair trading and flipping. It's the same as flipping your dollars into a stock. Or a simple analogy I was trying to think of to help people wrap their heads around. Imagine that you see two tables. One table has 10 apples, one table has 10 pears. Then a second later, there's 13 pears and 10 apples, but they're both equivalent. Would you swap your 10 apples for 13 pears? Pears is in the fruit, not pair trading. But as I say, and that's the way to think about it. And then maybe all of a sudden there's 15 apples in the other table and 13 pears. Would you trade your 13 pears for 15 apples? That's the simple way to think about it. But here, at the bottom time, when the numbers are really high, so I call it kind of the floor being 180, that is 180 Tesla shares for every Bitcoin. And the bottom is about 80. So think of that as a range in which you have to look at. Now, the other thing that I also do was back then, I was thinking, okay, to me, Tesla's trading at 103, 106, 109, 120, 130. I know it's going to 400. I just don't know when. Will it be a year from now or 18 months from now? Maybe 24 months from now, but it's going to $400. And that's what I was saying. Well, is Bitcoin going to do a 4x in that time frame? Is Bitcoin going to go from 20K to like a 3x would be 60, a 4x would be 80? And my thinking was no. And I think in terms of the next halving and where I believe Bitcoin price would be, and this is back in December, and I thought here, at the halving, I expected Bitcoin to be about 32K and Tesla to be about $400. Well, wow, how things have changed. The banking crisis has fueled Bitcoin action. And that's why this calculus is now a little bit different. So let's look at another version of the chart. What we can do here is, the question is when to move. So we had that huge parabolic run when basically Tesla tanked and Bitcoin was strong. And that meant you could get nearly 180 shares of Tesla for every Bitcoin. And I thought it would be prudent to swap Bitcoin into some Tesla for a very, very small portion of my Bitcoin bag. I didn't swap everything. It was literally about a 40th of my position. And then it fell all the way down to about 110. And now it's gone back up again to 145. So we're in this weird range. And yes, you can play that range if you can time it well enough and if you have the systems to do so. But that's kind of where we are right now. Swapping back will depend on where we get to. And if we do go low again, yes, I will. But at the moment, we're still high. So I hope that helps. And we're going to be talking a lot about another pairs now. This one, it's funny because we had a community member that nailed pair trading between GBTC and MSTR within a pension account and was able to 1.7x or get 170% return in 6 months just by pair trading. And I never ever considered that pair, but it's stunning. But the detailed post yesterday on Patreon with the spreadsheet. But this is the ETH to Tesla trade from Johor. I'm looking to convert ETH to Tesla. Can you show us the pair chart and how it looks in terms of mean reversion? When would a good time be to make this conversion? Not financial advice. So this is another one that I don't ever trade, but I did look at one thing that's very important is co-integration. And the reason I love these questions from the community is because I always learn something too. It makes me dig and discover new stuff. So this one blew me away. So when I analyzed, I couldn't run a co-integration analysis between ETH and Tesla, but I could between the Grayscale Ethereum Trust and Tesla, which is kind of close enough. And it did show that it is 95% confidence it is co-integrated, which is good. Very good. But then I said, well, why don't I compare Tesla and Bitcoin, i.e. the only analog I could get was GBTC. And there it said it's not co-integrated. So that kind of blew me away because people think Bitcoin and Ethereum are integrated. No. But the Grayscale ETH Trust is a pretty good, surrogate for proper ETH. And to see that difference was very interesting. So taking this as somewhat gustable, and why, a quick reminder to everybody, why we look at co-integration. And I also look at correlation sometimes as well. Correlation checks the linear relationship between two variables, and co-integration is used to check for the existence of a long-run relationship between two or more variables. And I checked 3 or 4 years of data on those pairs as well. And if movement in one explains movement in the other, but the two series can diverge or be aligned, that's it. That's what you need to look for. So let's look at the pair after all that. This is when to flip ETH to Tesla. But there's a caveat at the end as well. I always say keep your head out the window, watch what's going on in the market and macro. So here you have the mean reversion at the bottom. And when it is up and red, that is a turning point. When it's down and green, it's a buying point. Red selling, green buying. Now, the chart above is the ETH divided by Tesla pair. And you can see the typical ratio ranges anywhere from 4.3 to 12.5. 4.3 is where I have the big green arrow at the bottom, where there's this buy signal flashing coincidentally as well. That's the point at which you flip Tesla into ETH, because for very few Tesla shares, you can get 1 ETH, i.e. 4.3. And then on the other hand, the red arrow is when you flip ETH back to Tesla. That is the zone. And again, this can be extremely lucrative if you have the tools and you can time it right. Now, the important thing, you asked about mean reversion, very clever question. Look at the bottom. Look at where the buy signal flashes and the mean reversion is so deep. That is your pico time to flip. Same thing on the red side. You got a triple top, boom, 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 of mean reversion means way outside the standard deviation. And that is when you do it. So think about between the 4 and 12 range. But this is the thing you always have to consider as well, is where these assets are going. Okay? So first of all, think medium-term targets. Now, in my mind, I do believe ETH will go to 5,000. Again, I don't know when. It could be April 2024. It could be Christmas 2024. But somewhere in that time frame, I do believe it could hit 5,000, especially now that it's deflationary. And that is from here, that's a 2.9x return. And Tesla, being where it is right now, just under 190, that's a 2.1x. So remember this little cute little picture here of jumping to the faster horse when he or she runs out of steam. I don't know if it's a stallion or a mare or gelding or whatever type of horse it is, but that is the key. And we do have audience members whose children have horses, so I thought this would be a cool picture to share as well. But remember, sometimes certain assets run and then they run out of steam, just like you saw in the mean reversion. And that's the time you move to the other horse that's about to run. That's the big lesson today. So thank you so much for the question. Next one is from Andy M. Another pair trading question, because I think the community is seeing how powerful this is. So what steps do you take for pair trading? So you close position on one asset, you convert to cash, you transfer it to another platform, you open position on another asset, or is there a shorter path? One is, first of all, Andy, great question. You don't want to be moving money around, especially with things like Operation Choke Point. If you're trading crypto, it's just going to be so slow. And even if you move money into an account, what happens to a lot of people get stuck. I always say, move money on, do your business and get it off. If you're moving, say, a wire or ACH, it'll take time for that to be credited to your account. Or even if they give you instant credit, like if it's an ACH, they won't let you take the crypto off the exchange until 7 to 10 days later, which catches a lot of people out. So be careful of that. So you want to have everything on the same platform so you can swap them in real time and get real time credit. So the way I like to think about this is find the co-integrated pairs that you know and like we just discovered, like ETH and Tesla. ETH from Grayscale and Tesla are actually co-integrated, believe it or not. Find a brokerage that has them, e.g. MicroStrategy and Bitcoin, or MicroStrategy and GBTC, or Tesla and ETH, or Tesla and ETH, and then you buy and sell them with time gap. But remember, sometime, what I mean by the time gap is, imagine you have Bitcoin right now, it's trading at 27,819, but a few minutes ago it was trading at 27,680. So wait for the asset you're selling to be on the pump before it starts mean reverting. Very important. So you get the maximum, and then buy the other one cheap. And sometimes I wait between pair trading, like 20 minutes, 15 minutes, and I wait for that time just to make sure I at least clear the spreads on the assets that I'm trading. But you have to do everything under the one house. And we're not at the level yet. We have in crypto, we've got the ability to trade pairs directly, like GBTC ETH pair, for example, or no, Bitcoin ETH pair, but we don't have them for stocks. We had a glimpse of time where we had tokenized stocks, which are, of course, not pure form and very risky, but there'll come a time again in the future where we'll be able to pair trade everything in real time without any slippage. So hope that helps. Next question is regarding Arbitrum. Everybody's excited about Arbitrum and should they buy? So now the Arbitrum is available. What is the plan to gain long exposure? Should we buy now or wait? As sometimes new coins come out flying, then dump. From Histepa 1. Absolutely correct. Let's dig into Arbitrum. Now, first of all, I have to say the adoption and the performance is incredible. Arbitrum, last time I checked this morning, it had 5 times the number of daily active users as Cardano. And it's a pretty new layer 2, so that's kind of stunning unto itself. Let's look at the Arbitrum sell pressure you're referring to. Here you can see the 80% dump in 30 minutes from Glassnode. The airdrop saw a massive sell-off, and that was typical. You get free money, you're going to sell it, turn to cash, and invest it somewhere else, or turn it directly into Bitcoin. And the ARB lost the ARB on ARB. That's funny. Arbitrum lost roughly 80% after 30 minutes being listed, and out of the 600,000 eligible wallets, I think there were, only a handful got lucky in Uniswap. So literally you have to have your finger on the trigger and dump immediately. And that was critical. Now, there's a lot of people out there that are slinging false hopium. So just be careful of this. It's like you see, all the kind of scam tokens going to $100 or $1,000 or whatever. But now people are saying things like income sharks. I hope it runs to $100, Arbitrum. Okay. If that were to happen, Arbitrum would have a fully diluted market cap of $1.3 trillion. It's never going to be worth that, okay? Just put things in perspective. So be careful what you read and do your numbers in the back of a napkin. Don't just say, oh, I can buy something for $1 and sell it for $100. No, it's not going to happen. Let's dig into some elements of Arbitrum. First of all, a lot of people ask, why do layer 2s even have a token? And that's a big question. And ARB say, we need a token so we can be more decentralized. Okay. But when you look at it, it's clearly not decentralized. And the way I summarize it, pull up the slide here, is huge inflation, heavily centralized, heavy whale concentration, heavy insider distribution, and 87.2% of tokens are going to be unlocked over time. So this is the highest of all tokens that we analyze in the compendium. So just be careful. In addition, putting it in perspective, how it lands up against other ones, ARB has a fully diluted market cap of over $13 billion today. That's more than Matic, that's more than Solana, and that's just under Cardano. And note, it's already fallen 89%. So be very, very careful. The way I look at it too, in terms of valuation, and I shared this actually on DCA a week ago, 6 days ago. This is my estimate of a fair value for Arbitrum based on benchmarking against other layer 2s. And the fair value should be somewhere between 40 cents and $1.20. And currently it's trading at $1.28. So that was pretty, I was pretty happy that I was off by 8 cents. But I knew the high end of a fair value has to be somewhere between 40 and $1.20. So call it 80 cents or 90 cents or thereabouts. But paying more than $1.20 is just stepping on a hand grenade, and I don't recommend it. So that's ARB. I would not be adding it to my position. And the first lesson of today, which we'll see a few times, watch for share dilution or token inflation. Okay, that sell pressure will smash you over time and keep the price down. Okay, so do not touch these things. And again, ask yourself, why? Why is there a token? To be decentralized? No, that doesn't make sense. Anyway, that's Arbitrum. Next question. And by the way, I always, when I say things, if people are bag holders, I say things that I believe are true based on numbers and data, they get upset, but I'm not going to change. So that's just it. So next one from Arsenal 1. MicroStrategy has lagged behind Bitcoin. Is this stock dilution? What impact of ARB model shares per Bitcoin? Plus, how do you see analysts, the market reacting to MicroStrategy once Bitcoin gets to a positive price on MicroStrategy balance sheet? And could that lead to it becoming a darling favorite stock amongst those who don't quite get Bitcoin but who appreciate pure numbers? Great question. So there's a number of elements to this, and we're going to dig into MicroStrategy dilution over time and where they are, and then that critical, what I call the tipping point of MicroStrategy stocks. So the first one, I did analyze all of the historic dilution or stock buybacks over time for MicroStrategy going back 20 years. And I actually had it because I keep a close eye on all stock dilution, all token dilution. It's what I do, what I've always done. So if you look at the MicroStrategy here, in 2022, they increased the number of shares outstanding by 5.89%. Think of that as inflation, okay? It eats your purchasing power. And it's not too bad. 2021, it was 13.51. It was a lot high. But what's really interesting, if you go back in time, you go back to the year 2002, they had 11.95 million shares. Now they got 11.3. And you can see the stock buybacks versus stock issuance. And MicroStrategy have been very, very good with this compared to other stocks. Even if you look at Tesla, their dilution is 3 to 6% per year of dilution over time. Second thing, cross-checking the numbers of exact numbers outstanding today. In purple there, I calculated about 11,548,751 shares. So with that, if you calculate that from the year-end amount of shares outstanding to today, that is exactly 2% inflation. Again, not too bad because they did say they were going to issue more shares to pay off debt. And that was the Silvergate debt, which I agree with. Next, remember, second time today, share dilution, very important. So keep an eye on it. And this is not that bad considering what they do with the money. It's not like they're giving it to the executive team or whatever. This is the tipping point. Very important. MicroStrategy, I do believe, once Bitcoin price goes above 30,137, the calculus, and that's the average price of every Bitcoin purchased, I do believe the calculus will change as to how Wall Street views MicroStrategy, especially if it goes bombastic. And there'll be times, that's why we built the ARB cloud, there'll be times when MicroStrategy is overvalued and undervalued. And remember as well, one of the things that's pretty cool about MicroStrategy is if they were a spot ETF, you'd be paying a 1 to 2% fee and it wouldn't be leveraged. MicroStrategy is leveraged. They borrow money to buy Bitcoin. So it's a leverage bet on the future of Bitcoin. And also it's a software company that generates cash flow. And they convert cash flows into Bitcoin. And also it's a de facto, I believe, spot Bitcoin ETF, but with one big difference is they have tax deferred yields on the returns. So I think it'll be exciting. So in answer to your question, yes, we need to wait and see. But remember, they do have debt. They got a big bag of Bitcoin. The business has some intrinsic value, and all of that combined will make for an interesting time. That is why I hold MicroStrategy, and I trade it, and I swap it between Bitcoin and MicroStrategy, depending on the day. Next question is from BT. So, Cleanspark is the same price it was when Bitcoin first went sub 16,000, despite Bitcoin rallying 80% since then. Do you look at the Cleanspark Bitcoin chart, or does stock dilution make this too hard to trade? Brilliant question. I've been so tempted to buy Cleanspark under $3 for the longest time. People have seen me chat about it. I haven't pulled the trigger because I don't know how much dilution is. And again, let's look at some more. Dilution. This seems to be, should we just call this Dumpage video. So here, this is Cleanspark, and you can see for the first part of the last 12 months between April and July, no stock issuance. Starting July 2022, they went on a rampage and issued a lot of stock. In fact, it's 90% dilution over the last 9 months. If you guys like patterns and numbers like I do, I found that quite uncanny. Exactly 90% in 9 months. Let's calculate again like we do before. I have this ARB model, but considering they don't have very few Bitcoin on the balance sheet, it doesn't really make sense. They have 100 Bitcoin last time I checked yesterday. And you can see based on the share price and the market cap, they have about 77,992,912 shares. Let's compare that to what we had before, 77.9, 77.99. So yes, the math checks out. And remember, third time, watch for share dilution. So this is exactly what you saw. Bitcoin has nearly doubled from 16K and the Cleanspark price is the same. Let's look at the chart, the pair trading chart. This is Bitcoin divided by Cleanspark chart. And you can see there are right now 10,346 Cleanspark shares for every Bitcoin. That's the pair. It shows as well, Bitcoin has outperformed Cleanspark by 201% since a year ago. And this reflects the 90% dilution. Well, basically, the pair has more than doubled and it's tripled. And that is part of the actual problem, stock dilution. But the wild card that Cleanspark has is they are investing very heavily in rigs. They sell every Bitcoin as quickly as they can. And per all of my analysis over years, they are the most effective and efficient Bitcoin miner. The question is, what are they going to do next? Are they going to continue issuing shares? If they issue shares and can buy rigs cheap, easily, turn that into profit, that's fine. If they're doing something else with the money, I don't know. But will price go up? No, not if it's facing a lot of dilution or just like in crypto, token inflation. This is why we are obsessed with it. And we will get to the bottom of this as well because I have Zachary Bradford on the channel March 29th. That's only a few days from now, 3 days from now. And we will discuss this and Bitcoin mining and regulation and their strategy going forward, etc. So it's going to be super interesting for me as well. Because I do believe there's a lot of opportunity with Bitcoin miners, especially when you look, last time I calculated, they're making 6% return on capital every month from Bitcoin mining. That is stunning. You annualize that 6% compound over 12 months, mind-blowing. That's why. But we'll get to the bottom of that. So those of you who are interested, this will be interesting because I'm sure we can uncover some good alpha there. Next question is from Sol Life. How does one determine if their bank is in trouble? This is a good question. As banks are blowing up all over the world, people are freaking out. We've done multiple banking videos, so much so people are saying, stop talking about banks. But it's important because this impacts Bitcoin. If it didn't impact Bitcoin, I wouldn't even care. But I was in one of the banks as well that did get caught in the downdraft. So there's a couple of ways traditionally you could do this. Let's talk about them. Number one, first of all, you look at ratings like from Moody's. And I tweeted this, I think it was on sometime in March. And I spoke about ratings agency Moody's, and Friday downgraded the ratings of SVB Financial Group. And over the weekend it blew up like way back when. And then I talk about Moody's kind of taking Tesla out of junk status, which is just so crazy. And nobody really understood this tweet. But net, I think a great man once said, I think it was Hexopotamus on Twitter reminded me of this. and that is what rating agencies do is they show up at the end of the battle and they stick swords in the wounded. That's it. And I just thought it was like so valid. So number one, forget about that. Number two, you look at what's in their portfolio. Dig into their balance sheet. Look at their bond portfolio. Look how much commercial loans they have. So for example, this one here, number 4 on this list is Signature Bank. That's already gone. So I put a little X there, but you can see some other names to keep an eye on. These are ones with very, very heavy commercial real estate loan portfolios, which I believe is the next shoe to drop. Valley National Bank Corp, Home Bank Shares, Glacier Bank Corp, East West Bank Corp, Webster Financial, First Citizens Bank Shares, M&T. These are the ones that could have some serious pain. Remember, these are fractional banks. So it doesn't mean the whole portfolio needs to blow up. Just 5% of it, and that's it. Game over for the bank. They're not liquid anymore. Sometimes even less than 5%. So that's the second way. Third way is look at banks with deposits less than 250K as a percentage of total deposits. Start at the top left corner. They're all the ones that are probably going to be rock solid. Bottom right corner, in hot water. But the good news is, well, sort of good news. This lady here, her name is Janet Yellen. She says mixed things. She kind of says, we'll guarantee all deposits up to any amount, and then, well, we need to talk to Congress to do it, etc. So I don't know. They're all over the place. But either way, I think they will try put a lid on preventing bank runs. But the next shoe to drop, as I've been warning, is the illiquid asset space. I showed a slide yesterday on the channel regarding private equity. Deeply underwater. They're going to get smashed. Venture capital, they already got hurt with SVB going down, and they have a lot of assets and not going to be able to raise money. They're going to go down, so the VCs will get hurt too. Commercial real estate and the likes of that. Anyway, that type of exposure. And banks are unlikely to bail in the credit risk of these types of entities. So we'll see. And loads of banks, watch them with the commercial real estate exposure. I think that's going to be a big one. And just if you're just with any regular bank, or there's sometimes the smaller the bank, the more community bank they are, or even credit union type places, I think they're all very safe. But you never know. Next question is from Uncle B. Jeff Booth said the interest rate rises by the Fed have a more sinister endgame. They are aimed at checking the rise of China besides the internal inflationary narrative. With USD as a global currency, a weakening value means China advances their global domination plan cheaply and easily. And raising rates puts pressure on the Chinese economy and slows them down, despite the pain it's causing domestically. He thinks that China is the main target. What do you think? And does it mean the Fed hikes are more likely to continue? So, brilliant question, and utmost respect for Jeff Booth. He is a wizard. But I couldn't find a record of him actually saying this. I know he loosely referred to it as a tangential idea, perhaps. But I don't see this. So first of all, I know his book incredibly well, and tried to find something that he specifically said about this, but we couldn't find anything in the book. And again, great book. But he did warn about debt deflation, which is very, very important. This he calls a Great Depression on steroids. I love that. And if the Federal Reserve continues to hike interest rates, he believes this could cause a huge problem, that whole debt deflation thing. Now, in terms of the Fed's toolbox, a couple of things here. While Booth does not explicitly link the Fed raising interest rates to combat China, Booth does argue that the traditional economic levers that the Fed has in its toolbox are less effective in the new global landscape in the book, The Price of Tomorrow, that I just showed you. Now, the Fed sets interest rates as a means of controlling inflation and promoting economic growth. When the Fed raises interest rates, it makes obviously borrowing more expensive, which just slow down everything, yada, yada. You guys know about this very, very well at this stage of the game. The big question is debt. So we know how out of control debt is. In fact, it is beyond a joke. And my whole thesis was the more they increase rates, the more they reduce GDP, the more they reduce tax revenue for the business, the more they explode deficits, and the more they increase debt, which means the more they have to print money, the more they increase inflation. That was my whole thesis. And I assumed logic would prevail within the Fed with their 320 PhDs. I was wrong. No, there's no logic there. And that makes me think maybe there's another plan in play. And silver tinfoil hat on here, I think maybe Jerome Powell is trying to implode the Biden presidency. Who knows? Because one random idea, because it doesn't make any sense what they're doing. Even doing a huge amount of QE over the last 2 weeks and raising rates into that is just stupid. Anyway, enough of that. This is the real problem, though. This is China. They're dumping US debt as fast as they can. I was surprised some of these countries actually had so much US debt. But as of January 2023, the total amount of US debt held by foreign buyers was about 7.4 trillion. When you add all these numbers up, 253.4 billion is down from a year ago. That's more than $250 billion reduction from foreign buyers. And they have only just begun to get rid of US debt. And the main sellers were Japan, 200 billion, China, nearly 200 billion, Ireland, 55 billion, France, 49 billion, Brazil, 22 billion. What else am I missing? South Korea, 18 billion. But the key thing is, China was the biggest holder. They dropped 17.5% of their debt in 11 months, which is staggering. And they're trying to get away from it. And while you may think the Fed are trying to outsmart China, remember, China is in bed with Russia. And China is working with major economies throughout Africa and Brazil and Southeast Asia and you name it. BRICS plans for currencies, trade agreements to get away from the dollar. It's all happening. I think the minds that prevail in places like China are far ahead of the thinking of the Fed. I think the Fed is doing different things. So it's just my theory. I could be completely wrong. And no offense to Jerome Powell and President Biden and all of those presidents that I mentioned. But this is basically the end game here. And sorry for being long-winded, but it's a very difficult question. And I want to make sure I cover it well. So higher interest rates theoretically could affect China's growth, but I think they have very limited power today. Second, higher interest rates rise in the US. Investors may find US assets more attractive and not invest in China. But as I've mentioned as well, China is now the most crowded trade. So that's not working either. People they're investing in China now more than any other asset class on earth today. Third, can also lead to capital outflows out of China, which can slow Chinese growth. Well, that means the Chinese would be attracted by the high interest rates in the US. They wouldn't invest in China. They'd invest in the US. No, not with capital controls, so that's not going to happen either. Also, Chinese debt denominated in dollars at higher rates can reduce their profitability and hamper their ability to invest and expand. And that's exactly why they're dumping US treasuries as quickly as they possibly can, because they want off the dollar and they don't want to be beholden to them. So net, long-winded answer, no. So that's my answer to your theory about what Jeff Booth may or may not have said. I'm not sure. Next question is from Loose Change. I'm 33 with 100K and looking to get my first castle in Western New York area. Is it better to secure a home sooner or wait until prices drop towards end of year? I rent now for $1,800 a month, so I don't feel in a rush. P.S. The DCAS model helped me with my final steps in becoming a whole coiner. Woohoo! DCAS, by the way, is dollar cost averaging on steroids, and congratulations on being a whole coiner. But please lock your security down, because that's going to be very, very important in the future. All right, let's look at where we are in New York. I had to brush up on the New York real estate market. This is the Case Shiller and S&P over Case Shiller, New York Home Price Index, and it's only a 2.2% drop from that level. So basically, New York real estate is holding up rather well. But the better one to look at as an indicator of how strong New York real estate is, I know Manhattan is hurting because people are leaving the big cities, and I know people are leaving high tax states, but this is one town which is pretty representative of what's happening outside of Manhattan. It's Albany, New York, and the prices here confirmed no slowdown. You can see it's up and to the right, a tiny little dip, again reflecting about 2 to 3% drop. And it's very, very impressive the way the market's holding up. And remember as well, we're moving into springtime, and that's when real estate prices actually start to skyrocket. Humans are like animals. They start nesting in spring when the weather gets better and there's blossoms on the trees and stuff. So I do expect prices to potentially go up from here, especially as mortgage rates get a little more attractive to some people in some markets. And it sounds like you've got a pretty big down payment, so you should be in very good shape. So what I would do, my strategy, what I've always done, is check out the 10-point matrix on Patreon. You know, the 10 parameters you look for, score them, fill it out, and then set your search parameters in Zillow or Redfin, MLS, whatever, and then hunt. Try find 6 out of 10 of your parameters. And if you find your castle, put a low ball bid on. Try see how much activity there is. Go around, look at open houses, see if there's a lot of people interested. Talk to the realtor, say any offers. And if there's none, try drop, 20, 30K under asking. And odds are you'll get a fill. And that's what you do. You keep doing it. It's a lot of work, but it's worth it when it's for such a big decision. And final thing, thank you for all the great questions. There's 50 slides. Tomorrow, DCA has a special surprise guest. I'll be there on this channel, 7:30 a.m. Pacific, 2:30 UTC. That's Greenwich Mean Time. And by the way, if anybody hates the time zone UTC, let me know. I use it because that's what Bitcoin is priced at. That's when the Bitcoin price clocks over. And it's also London time. But if anybody wants a different time zone, let me know. But that's what it's going to be. That will be 10:30 a.m. Eastern Time, United States. And we look forward to chatting with our new guest, with Ran, CTO, and myself. And final part, best part of the show, is helping animals. One of our members, Reclused Man, wanted us to donate to the endangered monarch butterfly, which is at risk of becoming very, very endangered. And we found a cool organization in Iowa, where one of my favorite bands is from. If anybody can guess that name of that band, let me know. Drop a comment below, which boosts monarch population, rebuilds natural habitats, and so much more. And when you're looking at with this photo, because I too learned a little bit, I didn't know you could actually breed monarchs in tents. But the photo on the left, they are cocoons that this organization has set up in tents. And these monarchs will be mating monarchs that provide eggs for over 180 active monarch zones in and around Lynn County in Iowa. And it's fantastic work. And thank you for the wonderful suggestion. And we actually have 2 huge 3-meter plus butterfly bushes, and we'll plant 2 more this year. So thank you, everybody. Let's go to some questions and see what's going on out there in the world. We'll check in on Bitcoin price too. Bitcoin still 27,850, very flat. It had that little run to 28.2 this morning. And big thank you to the mods in the chats and everybody as well. Let's go. Oh, wow. So one Brighton. Hang on a second. Let me see. Out of Bitcoin, Sol, and Tesla, which you think will have the most time to buy at these prices before a price takes off? Well, let me think about that. I think when I look at crypto, and again, just a reminder to everybody, if you imagine my crypto portfolio and my equity portfolio, I'm like 80% Tesla in my equities, 80% Bitcoin, actually 82% Bitcoin in my crypto. And then I have about 5% Solana and about 13% Ethereum. So that is kind of my positions. And I have NVIDIA, Google, Meta, stuff like that in my equities. But I believe in very high concentration. Of those, it's so hard to say. Bitcoin has already run way further than I expected to at this time of the year. I knew 2023 would be good, but I didn't think it would run, 70% in 70 days or something like that, which is stunning. But it was also the banking crisis helped that a lot too. When I look at the scarcity of Bitcoin and the supply crunch, that's really becoming an issue. And that's why I'd be very reticent to sell. Like I think about swapping out of Bitcoin at this price into other stuff, but it could run. I mean, it doesn't take a lot of money to move this thing. We're seeing a big move of stable coins into Bitcoin and some other factors that are making it very popular. And it's on every news station, newspaper, etc. So out of Bitcoin before it takes off, I think it's already taken off. Could it go higher? Yes, but I don't see it going above, say, 42K. That was my high target for the halving April 2024. we'll see. Like, we're very close to 30K now, and it can get there very quickly. Solana is just drastically undervalued. Look at Arbitrum. I mean, it's a layer 2, and it has nearly twice the fully diluted market cap. Well, not nearly twice, but 20% more, which is stunning. And then Tesla, I think earnings could be very interesting in Q1. We'll get some insight on production numbers in a few days. And that'll be interesting to look at. I do believe it's worth $400. But right now, Solana will outperform everything. Once alt bull run begins, there's no doubt about that. It could easily go back to $100. And that's a 5x from here. Will Bitcoin 5x in here? Nope. Will Tesla 5x in here? Nope. But remember, Solana's a lot riskier too. And that's the trade-off that you have to play with. So the most time to buy at these prices before they take off, again, it's time to buy Tesla was a few months ago when it was outrageously cheap, and Bitcoin anywhere under 21K is outrageously cheap for that asset too. And Solana's still outrageously cheap. So Solana's still the cheapest, I think, of all of them. And Ethereum, if we see any Ethereum under 1,500, 1,400 now, I think that is very attractive too, because all of the layer 2s are actually bringing value to Ethereum. And that's another way to think about that too. So I'd add that fourth bucket there. So I can't answer directly other than most upside, but also the most upside has the most risk. Remy the Whippet, true, false? Solana breaks 100 by halving and puts in a new all-time high between 400 to 500 eventually. I think during the next bull run, I think Solana has a potential to hit 100 again. Remember, the 259 all-time high was a function of Alameda manipulation, which we all found out later after the fact. But at the same time, it all goes back to modular versus monolithic chains. And that is the million-dollar question. Which architecture will win the layer 1 wars? That's it. If you look at the prevalence of Ethereum, how it's everywhere, omnipresent with all the layer 2s building on it, is pretty impressive. But the stuff that's happening on Solana is also very impressive. So that's why I split my bets, and I have a much heavier load on Ethereum, because it's a legacy position that I've had for a long time, and it grew up very fast. So 400 to 500 eventually, if we start, we're beginning to see some big scale adoption happen now on Solana. If they can just keep the network up, everybody else is in trouble. But Render's moving over to Solana. You have Helium moving over to Solana. A couple more big projects like that, then it'll be a very interesting value proposition. Recluse Man, there you are, Monarch Butterfly. That is so cool. Thank you so much for thinking of us. I hope we are able to think of you. And again, I promise to build 2 huge new butterfly bushes, because we see them, and it's amazing how big they are. Some of them are like this big, and they just love hanging out in these bushes in the fall, not when it's too hot in the summer, but kind of September, October, November. And we'll also look into planting some milkweed as well. Thank you so much for all the tips. MT, what is the volume on Bitcoin US? Why is the volume on Bitcoin USDT almost non-existent? I saw, it's hard to say. I've been looking much more at BUSD and USDC. We had a huge amount of drainage. I think $16 billion left USDC in the last week or so. BUSD is shrinking. And I think the shrinkage of those 2 stablecoins is actually what's driving a lot of the price action for Bitcoin up. I haven't looked at Tether, but I'll check that out. And remember, all the spot volume really happens on Binance anyway, not what is happening on Coinbase or other players right now. But I will look into that. That intrigues me. And TraderBot Win, any thoughts on Tesla results next month? Dump or pump time before that? This is so interesting. And I read 100 things about Tesla every single day. I can tell you what's happening on the floor of a factory in China almost. A couple of things. One, they are going to start building the new Model 3 using the Highland technology scope, which means pre-molded front and back castings and everything else. It'll be far more effective and efficient to make this car, which means they can drop the price even further and dominate the markets. Also, you have traditional car manufacturers reeling right now. Parking lots are full at dealerships. They cannot sell cars. My neighbor has a F-150 truck, the Lightning, and he said it's a disaster. He can't get it. It takes days to charge, and he can't get over-the-air updates. And he can't even get the Ford dealership to do the update because they don't know how to do it either. It's just comical how far ahead Tesla is. I think the results will surprise a little bit to the upside in terms of deliveries in Q1 because the expectations are very low. But remember, they are ramping. I think Berlin has just hit 5,000 a week in production. Do the math, that's 250,000 a year. And they're just ramping. Austin is not far behind, if not they're already there. So if you add up all the production between Fremont and Shanghai, Austin, Berlin, you're at 2 million already. So future's bright, but people don't understand the wild card that is their energy business. That's the one that I'm really focused on, is what they can pump out of Lathrop. How many of those megapacks? Because they're just pure margin. So I'm on the bullish side. Once I get to the point of thinking, okay, Tesla's overheated, then I'll sell a call against my position. But I am nowhere near that position right now. So thanks for the question. And thank you for your super stickers as well. Jeff Hammer, AC1, Viciously, and KN. Thank you so much for being here. Have a good weekend. Smell the roses that are beginning to bloom as well. And I'll see you all tomorrow. And a big thank you as well to Recluse Man for helping us help the people in Iowa to help more monarchs. Thank you, everybody. See you all tomorrow. DCA tomorrow morning early.